poor working capital killing your business growth? Are you looking to grow your business without falling more into debt? Follow my video and I'll explain more. Our mission is to help small business owners exactly like you. So please click the bell to subscribe to be notified every time we produce our best pieces of content and get the message out to other business owners too. Working capital best practices to ensure that you don't get further and further into debt. Follow my video and I'll explain more. Working capital can sometimes be difficult to understand and it also changes. Now, in layman's terms, working capital is the difference between your accounts receivable or trade debtors, because that's money that your customers owe you, less what you owe to your suppliers. So in the most basic terms, the difference between them two is what you need within your business for working capital. Now, a lot of our clients get a bit overwhelmed with some of the numbers, so we convert this into days. So if you have a look at one of my previous videos on debtor days, I explain how you take a financial calculation and move it into days. And what you want to have a handle on is knowing what your creditor days are, what your debtor days are, and it's the difference between the two. Now, there is a more complicated calculation where you have total lockup, where you have WIP or stock. That is not for this video. I just want to break it down into basic terms. So within your business, do you know month by month exactly what your debtor days and creditor days are and how you could improve both of them? Comment below, as we'd love to know. A bit of a challenge with this is it is never a fixed target. Your debtor days will vary throughout the year, and it's not because you're good, it's not because you're bad, it's just that's the way it is. So there are some businesses that have zero debtors and that's good, but at a whole, your debtor days will move from a range. So you need to know how that range impacts on your business. I'll give you an example, yeah? So if you've got debtor days of currently 30 and they go up to 40, how much is that in extra physical pound notes that you need within your business to support that? Because what that basically means is your customers have taken 10 days longer to pay you, and what impact has that had in your bank account? How much has it been squeezed? How much has it put you further into your overdraft? Or you can't pay off credit cards within your business? And you need to know that because it genuinely moves and there's nothing you can do about it. Now, yes, you want to keep it down. Yes, you want to have amazing credit control procedures, but it is going to move. And you need to understand the impact of how that moves. And the same goes with creditor days too. Ideally, you want to pay your creditors in as long as possible without being unfair and without annoying them. So once you get a movement of the two, which will go up and it will go down, you need to understand the impact that has on your business. Strategies to improve working capital management is number one, ask for your creditors for longer credit terms. So although they may give you 30, what can you do, inspire and negotiate with them to say, look, can we extend this to 45? And get their acceptance from them. You don't want to just lag them and say, right, your terms with us are 30. Go and agree it with them because it's the right thing to do, because at the end of the day, we're all small businesses working together and we rely on each other. They have their own accounts and problems like this the same way you do. The other one for debtor days is also, are there ways that you can get your customers to pay you earlier up front? Are there ways where you could do early settlement discounts? Do they pay you early, you give you a discount, And also, there's nothing better than chasing people properly. You could do that in the current world with software where you can chase people electronically, and sometimes there's never better than picking up the phone and say, look, this is past the credit terms, you need to pay it. You could also come up with subscription models. That's really beneficial for a lot of businesses where they then get regular monthly income. We all like regular monthly income, but if that reduces down your working capital commitment, that means you have to have less money locked up in your business, which could either be more money that you could take for yourself, or you could invest further in your business. And if you're a business growth company, you'd probably go for investing further in your business to make it bigger, better and stronger. You should monitor working capital with your regular monthly, bi-monthly or quarterly management accounts. So in your board pack that you're getting to assess your business, you need to have a section in there which is talking about working capital. So we run a report that's called a business overview report, and this is for prospects and also our current clients. If you look at page 2, which I'm going to have on the screen here, you can then see exactly what your your debtor and your creditor days are. Now on zero, your debtor days is known as accounts receivable and your creditor days is known as accounts payable. These are both the same thing. And make sure that you're noticing any wild variances, because they do happen, or if any of your systems or procedures have slipped. But you want to be reviewing this on a monthly basis, because you don't want to hit cash flow problems. Because if you've got to use money in your overdraft, it's expensive. Now they're really handy to have because it can get you out of a hole, but you don't want to be living in your business overdraft for a long time, because you are losing loads of profit by using really expensive debt. Please make sure you don't fall into this trap. There are lots of things out there to help with working capital too. So have you got the right financial products within your business to help you? You could look at invoice discounting, which I've done a video before here. You could also look at any business loans that you may need as well. But even before that, have you got an eye on what your credit score is with? I did another video here, check this out. So if you are looking to borrow money in the future, by having a greater credit score will give you cheaper money. Now I hope this video's really helped, but if it spurred any questions or you need a bit more advice, I'm going to put our discovery call down below. That will allow you to hop on with one of us on the team to take on board any questions that you have, and I promise there'll be no pushy sales pitch. We also have a range of webinars that are designed for small business owners. We've got our current business growth program, which is about to be live soon. Click the link below. We'd love you to join us on it.